For the entries, we are going to use the 5 minute. 5 minute. Someone may choose to use the 15 minutes. Even somebody may also choose to use the 1 hour. Whether you use the 1 hour, 5 minutes, 15 minutes, the same thing. When you get your zones right, it means when even you use the 1 minute, you are going to get things right. So when I marked the zones, the first part, this was the zone. It originated from this area. So price came to test. So price came there. It tested the zone. We had a wick over there, a very big bearish candle, but we cannot enter here. You cannot enter. If we decide to enter a sell here, our stop loss is going to be huge. So we wait for price to retrace again so that we will look for an entry. So even looking at this wick over here, we can also mark in the 5 minutes and say we want to enter. So with the wick, when price comes back to that zone, we are going to enter. Price came and we had this nice bearish candle. So you take a sell over there, then stop loss, you leave it somewhere here on top of that, then you just open your trade over here. So that was the first entry over there. All right. Then looking at the trade, price came back to the zone again. It came back to the zone again. Assuming we waited for price to, after price giving us this nice bearish candle, we waited, price came back again into the zone like this. And we are waiting for a nice bearish candle. So maybe after this candle, I place my entry here, then my stop loss is here. So at the end of the day, you see that price will take you out. Then after some time, it's sold. So when you are looking for a small stop loss like this, then you have to be ready for whatever is coming the way. So mostly, your stop loss ought to be at a high like this. For the safest side, that's how your stop loss is going to be. Either the 15 minute high or the 1 hour high. That's what you can use. But if you see that this stop loss is too huge, you can wait for price to change direction completely. So here you can see price reverse like this, but still we are in a bullish trend. We haven't broken any significant low. But when price got here, we had a double bottom here. Price came to this level, the same thing. Then we had this low that was broken by price over here. So you tell yourself, if the low was taken out by price, then it means we are changing direction in 5 minutes. So you draw your entry zone as this. All right. Then whenever I wait for price to change direction completely like this, I often use limit orders. So limit order will be here. Then for this, the stop loss can be on top of this because price has changed direction. Then your TP target, you wait and see. When price enter into the bands, then I will be getting ready to exit my trade. So price got in here. So probably I will be exiting around this place. And the risk reward is 1 to, let's see, 1 to 16 risk reward. Whatever, even if you get it closer like this, and you are getting 1 to 27 and 1 to 30, and it doesn't really matter. At the end of the day, the same profit is what you are going to get. The reward, the same reward. You are not, nothing is going to change. After getting the zone, you can even wait for this bearish candle to form. Then you enter here. Then your stop loss will also be at the top here. Then the same thing, you TP when price gets into the band like this. So that's the first nice entry on that. Then price came back to test the block here. There is the 1 hour one, and there is the 15 minutes. So price came back to test that zone. So if we want an entry, we can place it here. Then our stop loss can be on top of the 15 minutes high. Or if you want to protect yourself more further, you can extend it to the 1 hour high. Then you'll be waiting for price to move into our TP zone. Let's see whether price gave us some nice thing. Our stop loss was on top of the 15 minutes, so obviously we could have, price came back to entry, but we were protected by, I think, no, this is not that. This was the second one. So we can see that price came back to, where is it? All right. Price came back to entry, but our stop loss was at a safer place. So no cause for alarm. Price came back to a marked zone again, and we also had another entry here after this bearish candle. For that, our stop loss, this was the zone we are using. So our stop loss will be on top of this as well. Then we extend to the down. When price gets into the band or hits your 1 to 3 risk reward, you can exit. So again, price came back to the zone again, gave us this nice entry here. So your stop loss could have been here. So if you target 1 to 3 risk reward and you TP, you have a lot of opportunities. Or even when you miss the trade, in 5 minutes, price will give you another opportunity. So please, there is no FOMO over here. Just wait for your opportunity. Then price came back again into the zone with nice thing here. Then we have this nice entry. So your stop loss can be here, or you can also extend it to the top. Let me place it here. Then as soon as you see price enter the band, you can exit. Maybe you can exit here, or you can wait for price to, so it depends on you, all depends on you. Now the next entry, price broke a low here. We had this over there. Price got in. Then where would we have entered this trade? I think this trade could have been a missing trade because price broke, it came back. If I had wanted to enter, maybe this would be my entry. Then my stop loss will be on top of that zone. Then assuming it's 1 to 3, you get it. Or if you are using the bands. Let's see whether price came back to test that zone again. Price went up again, test the zone nicely. And this was a nice entry. Of course, stop loss nicely placed. Then TP, probably if you are content, you exit around this place. Then you are done. So we are waiting for price to give us a new entry, whether it will come to this zone or this zone. That's what we are waiting for price to do.